Welcome to the Randy Selzer Real Estate Podcast, where we discuss important topics for buyers, sellers, and investors in the Toronto area real estate market. Here's your host, Randy Selzer.
Hello, everyone. It's Randy Selzer here. Welcome back to my channel. Today, we have a very special guest, Denise Pisani, who is a mortgage broker who I've known for many years. Going back, I think, to the early 2000s, is with us today. And Denise is with a company called Mortgage in the City. And welcome, Denise. It's so nice to have you on board.
Thank you, Randy. Thank you for having me. This is so exciting. When you asked me a couple of weeks ago, I was thrilled to be a part of your podcast. I think this is very helpful for people.
Well, it's my pleasure. And I was thinking back to, I think when we first met, I think that's when I was at REMAX and you had an office there in the REMAX professional's office. And
yes, that's correct.
Early
and I
2000s.
worked for a bank.
Yeah, you were with a major Canadian bank. That's right.
Yes,
and that's when we first met. So we've known each other for a long time.
Yes,
and
many
here we
years.
are. We're still standing. Unbelievable. With
still
all the
getting
changes.
through this. Yeah, I know. So crazy. So crazy.
All the stuff that's going on.
People are still buying homes and they still need mortgages. So here we are.
That's true. And boy, are they ever buying homes. I've told many people that a year ago when COVID first hit, I went out on YouTube and did a video saying that I thought the market would soften and slow down, prices could come down. Boy, was I wrong. I was 100% wrong, but nobody knew back in March of 2020. And the market didn't go down. It actually went up about 15%. And here we've got interest rates at record lows, under 2% for many people. Just unreal. And I know you mortgage guys are super busy all the time. So thank you for taking some time out from your, I know it's a very busy day you have to be here today.
Yeah, so, thank you so much, Randy.
My pleasure. And so before we start with the agenda, I know you, but tell us a little bit about yourself, who you are and how long, where you've worked for the benefit of the people listening today.
Yeah, so again, my name is Denise Pisani. I've been in the mortgage business for over 20 years, and I've been in banking for even longer. Let's just say that.
You started very young. You started, I think you were 12 at the time.
Yeah,
okay.
Yeah, I think so. But I did start my career with Canada Trust way back in the day. Yeah. Right during high school, I was a bank teller with Canada Trust. And I really enjoyed working with the public and seeing people every day. So I did go to school for a different career, but I ended up back at the bank and just climbed the corporate ladder. I was a financial advisor at the branch. And then, that's when I began to experience lending, with what I am doing today. And from there, I just kind of started focusing just on lending, and I joined their sales force, which was just mortgages. Mm-hmm. And I was on the sales force for about 15 years. And that's when I just, a long time.
And I know you won lots of awards. I remember you had a wall full of plaques.
I do. Yes, I just love helping people. And it's such a rewarding job knowing that you're helping people, buy a house, their first home, getting on the phone and telling them they're approved and, they're going to be moving into their house in a few months is such a rewarding experience. So from then on, after being 15 years with TD Canada Trust on their mortgage sales force, I decided to explore the broker world.
Right.
Being a broker, you're able to deal with far more lenders. You've got, we've got 40, 50 lenders that we can choose to place our clients with. So that was something I really wanted to explore. And I did that. It took me 2 years to finally cut my ties with the bank and move over to the broker world. So I am with a company called Mortgage Centre Canada. And then
Mortgage Centre Canada. Great.
Mortgage Centre Canada. And then I've got my own, I am with a major I am with a brokerage company called Get a Better Mortgage, but I have my little business, Mortgage in the City. Okay. So I am with Mortgage Centre Canada. Everyone's got their own little businesses running, but I have been a mortgage broker for the last 12 years and my business has flourished and I'm loving it.
I know you're super busy and I know you're super in demand. And I know you're up right now. I believe you've been nominated for one of the top 6 mortgage brokers in the city of Mississauga. And
Yes.
I hope you win it. I know I
Thank
voted for you. And
Thank you so much, Randy. I
you're going to
appreciate
win
that.
that for sure. And you would deserve it. It would be highly deserved for sure.
Thank you. Thank you.
So that's all you've been up to? That's all you've been up to
That's
for the
it.
past
Just-
20 plus years?
No, I have a family. I started a little bit later in life, but I'm married with 2 children, a boy and a girl.
Oh, great.
My daughter's turning 12. My little guy's turning 9. So, they keep my hands full, especially during COVID. I was, homeschooling plus working at the same time, which, we had a couple really busy years, as you mentioned in the beginning too. So it's been a crazy 2 years, that's for sure.
Yeah. I'm sure hoping we're going to get through this COVID thing. I think I'm sensing that a lot of people are just fed up with it. I don't know whether that's going to happen, but it's been a tough. I mean, we all deserve a pat on the back, I think.
Yeah, it's been mentally exhausting for sure.
I can't imagine being at home with 2 kids. I've been working from home for a year and a half now, and you get used to it. But my daughter's grown up and moved away, so I don't have little kids that require attention.
Yeah, it's been really hard, especially for them. Like they need that one-on-one at school. They need to see their friends.
Yep.
So
Socialize.
It's been really, they need to socialize. It's been very difficult for them. And I've even seen in the last month, it's back to school.
Yeah.
A huge difference. Difference.
So they're really excited to be back.
Yeah, just happy to be back on a regimen routine. We really needed that. Yeah.
Wow. So when we were talking a week or so ago, we were trying to come up with what would be a great thing to talk about. And there's so many different avenues when you talk about mortgage financing. There's so many. And what I normally get tied up in is when people are actually making a purchase. So they're either getting first-time financing or maybe they're buying a second house or a third house. But I normally don't get involved with refinancing. That's something that's sort of after the fact. After I've sold those people a property, I kind of hand them off to a great mortgage broker, and then I kind of leave it to them, between them and their lender. And you had suggested that we should talk about refinancing options available to people. And I think it's a great subject. And I think I'm going to learn some stuff from you today, because again, this is something I don't normally get involved with.
Yes.
So I have some questions here for you. And I know there's a couple of different types of mortgage refinancing that exist out there. Denise, can you tell us what are the different types of mortgage refinancing that a person could look into?
Yeah, that's a perfect question. So basically there's 2 types of refinances. There's one being a refinance where clients would want a lower rate. So say they locked in back in 2018,
right? And
the rates back then were roughly 3.5%, 3.75.
Yep.
Today, the rates are under 2%.
Yep.
So one of the types of refinancing is to refinance to get a better rate. So you're not borrowing any money. You're not extending the term, like the amortization. All you want is a better rate. So that's one type of refinance.
Okay.
The second type of refinance, which is actually more common, to believe it or not, than the first one, is when clients want to refinance to pull more equity out of the house, to borrow more money. So they're refinancing not maybe to get a better rate, but at the same time, pull some money out of the house to either renovate their home, pay off some debt. So say you've got another line of credit or a few credit cards totaling 20, 30,000. And then you also wanted to throw in a new kitchen. Now that the values have gone up so much, they might want to do some renovations around the house. So for example, if their mortgage is 200,000, they might want to refinance it to 300,000. So those are the 2 types of refinances: rate to get a better rate, and the second one is a cash out refinance.
Okay. So the second one, especially, they're taking advantage where their house has gone up or their condo has gone up in value so much, and that equity is just sitting there not doing anything. So what they're doing is they're putting the equity to work. They're saying, okay, we can take some of that cash out and use it for good reasons, to put in a new kitchen.
And a lot of people too have been refinancing to pull money out to purchase another property.
Yes.
So they're actually broadening their portfolio by purchasing an investment property.
A classic investor's technique. Where do you get the down payment for the next property? Well, you pull it out of the first one.
Exactly. It's doing nothing sitting there. So you might as well just pull it out and purchase another property and make money, because that's what that's what you're going to do.
Well,
You're going to
those seem
purchase
both-
another property.
Those are great ideas, both of them, I think. So if someone has a property and their house is, they paid 300 for it and now it's worth $1 million, they want to pull some money, they want to pull out 100,000. How do they go about doing that? What's the first thing do they simply call up their bank and say, give me the money? Or what do they need to do in order? I know it's a loan basically. So what do they need to qualify to get that money out of their equity?
Yeah. So basically, when clients do call me, what they need to do is we need to start the application process. So of course, if it's a past client, if it's a past client, I usually have all of their information, but if not, it only takes like 15, 20 minutes. I just need to gather some information. I don't necessarily need to pull your credit right off the get-go. I just like to collect the information to start. So once I do that, collect all the information, we do need some paperwork. So a credit check will need to eventually be pulled if you want to move forward. I do need current employment confirmation, so letters, pay stubs, T4s. And then of course we need to verify your existing mortgage. How much do you currently owe on the mortgage? Are we allowed to pay it off? Are there penalties involved? So those are the things that all help the client go through, like to figure out. Also, we need to find out, like, do they have a secured line of credit as well? Because that's considered a mortgage. So if they've got HELOC. So if they've got a mortgage on currently, for example, with TD Bank, and then they've got a line of credit in second position, well, those two are mortgages. So if you want to refinance, we've got to put those together.
Okay.
So,
I didn't know that. After all my years in real estate, I actually didn't know that. So if you've got a HELOC on the property, that would have to go away. That's going to have to get paid off.
Well, we could pay it off, or we can leave it in the same position, but we'd have to go back to the same bank that it's at, because it's just too complicated. To either, or we could pay everything off and then also put on a line of credit, a HELOC on again, if you want, at a zero balance. So this refinances does have to go through a lawyer. So a lawyer does have to be involved as well.
Right. So there are some costs. You're going to have to pay the lawyer something. Is it a large amount usually, or typically a small amount?
No, it's not. You're looking at probably anywhere between $1,200 to $1,500, but you've got to look at the whole picture. Like, if it's a debt consolidation, what are your interest rates on the credit cards and the loans? I'm sure they're more than 2%. The second thing, is your mortgage rate higher where it is right now? So by consolidating, are you getting a better rate? And if it is, then maybe
whatever costs there are to set it up, you're going to get that back within a few months.
You're going to get it back twofold. Exactly. Usually this is where, once I take the application and I gather all of the information, I sit back and I analyze it to make sure that it does make sense for the client. I'm not going to just do this because I want to do another refinance. It's got to make sense for the client. And if it makes sense, I am pretty honest with clients and upfront telling them, listen, this makes sense for you to do. I would never want to do something for a client that doesn't make sense.
Yep, absolutely. So I guess from the bank's point of view, do they do an appraisal as well? Do they send out an appraiser before they sign on?
95% of the time when we're refinancing, the bank wants an appraisal completed.
So it's basically applying. It's like applying for a new mortgage, basically.
Almost.
You got to show some ability to repay. You got to prove the equity is there that you say is there. That kind of stuff.
Right. Exactly. And for the
some setup fees when the lawyer is involved. Do you charge a fee when you're doing all this work?
No. So there's usually no charge to work with me, as long as
don't do that. You need to charge more.
No, the banks pay me directly. I don't need to charge clients. Wow. The only time there's ever fees is if we can't get it approved through a bank. And if we've got to go to a B lender or a private lender, then there's charges involved.
Sure. Okay.
There's lender fees and usually broker fees, but it's always good to have these discussions up front with your mortgage broker, because you don't want the mortgage broker to do all the work and then find out there's a $10,000 fee. I don't charge enormous fees by any means. So I do like to discuss that up front with my clients, but you're running anywhere between $1,200 to $2,500 broker fee if we've got to go to a private lender.
Okay. Yeah, that makes sense. So what are you telling people? Here's the classic question that I get before I hand people off to their lender or to their mortgage broker. Should you go fixed or variable? You must get that question at least 10 times a day. And
yeah,
I
well,
know
you're asking someone that is pro variable, love variable, 100%.
Yeah, I think variable's been coming out the winner over the last while. That's for sure.
I don't think I've locked any, like I do about 30 to 50, like I would say about 30 mortgages a month.
You do 30 a month?
Depending on the time of year, but
Denise.
On average, I would say through the whole year, on average, maybe 20. I would say about 20 mortgages.
You're a busy lady. You are a busy
lady.
It's
been very busy, but there's months when it's far less. But I would say the majority right now is a variable, even first-time buyers. Because once I explain to them the benefits of a variable mortgage, they can see and realize it's not that scary. It's like, it's very scary if it's not explained to you correctly.
Yeah,
because the rates can go up. Do they, like, first-time buyers think, can the rate go from 1.4 to 7%? They think that can happen overnight, which that doesn't happen. And if
rates go to 7%, I think I'll retire. I'll go live on a beach somewhere.
Yeah, I definitely don't think that's going to happen. I
don't think so.
Anytime
and
soon.
All the politicians are saying, like Trudeau came out and said a couple of times that the rates are not going to go up for at least a couple of years. And I think in the US too, I think they're kind of backed into a corner where they can't put them up too much. And so I think we're going to be okay going forward with that. Well, that's very interesting. So how long is this process? If someone calls you out of all these people calling you, and they say, look, we want to get some money out, we have this great opportunity to put in a new kitchen, and we'd like to refinance and pull some equity out. How long does it take several weeks to get this, or how quick is the process?
Yeah, great question, Randy. So it takes about, from beginning to end, you're looking at weeks from beginning to end. Like, that's just our first phone call, gathering all the information, depending how long it takes the client to gather me their papers. Like, sometimes it takes clients 2 weeks to get it for me. But if you've got all your papers up front, from beginning to end, and I've got your papers right from the get-go, you're looking between 2 to 3 weeks.
So pretty quick. Really
pretty quick. Exactly.
So they can get that contractor who has a freed up spot and get them in there and get the new kitchen done.
Exactly.
Awesome. Okay. So that's a great explanation of how it works. And okay, I've had a bunch of questions. We've answered quite a few of them. And so we talked very briefly at the top now about why people would do this. Obviously, debt consolidation would be a good one. Home improvements, putting in a new kitchen, finishing the basement, that kind of stuff. What about things? Could they use a refinancing like this to pay for their kids' university? Is that something that they?
Oh yeah, anything. As long as you qualify, you're able to. Of course, we have to, like you mentioned earlier, we have to verify income, look at income, go through the numbers, make sure all the numbers look good. And if the equity's in your home, you can basically use the money for anything you please. The bank does ask why the client's asking for.
So you could take some money out if you wanted to go on a 6-month trip to Europe, if we ever get to travel again. And that would be okay. So the reason for refinancing is not really something that the bank's worried about.
No, like, they do ask, why does the client need the money?
Sure.
I don't know if telling them that you're going away for 6 months would be good, because then what's going to happen with work? But
okay, maybe.
But usually,
or go to Vegas. We're going to Vegas. We're going to blow it up. No,
oh my gosh.
Maybe not the right answer.
Typically, it's just renovations, or I just let the lender know that they're looking to invest. And usually that's really what happens. But if they're taking money out to purchase a property to give money to a child, that's no problem. We've done that many times. Really, or if they're looking to purchase RSP, we've done that too. So yeah, so definitely along those lines, to let the lender know for sure.
So I know that the banks really changed the way they look at lending a few years ago, where now their biggest focus is on ability to repay. I remember way back in the day when we were working out of the same RE/MAX office, we used to say that if you had 35% to put down, you didn't even need to be employed. As long as you could fog the mirror, you'd get the loan. But that's completely changed. It was never really announced by the banks. And now they're very concerned about, do you have a job? Is there some way that you can repay this loan no matter no matter how much equity you have. It's interesting how they changed that very kind of quietly, but it's definitely been changed in case anybody didn't know. How does it, does that mean then, let's say retired people, senior citizens who are no longer working, maybe they're just on pension income, and maybe they've got no mortgage left on the house, but they would like to take out some of that equity. How could a senior person who has got relatively low pension income, would they be able to qualify for something, or would it be just for a small amount?
They do qualify for a little bit, like depending on what their pension is. Like if they're just getting OAS and CPP, yeah, that could be pretty minimal and they wouldn't qualify for much. But there are mortgages for people that are retired, like for the elderly. We do have chip reverse mortgages.
Right.
I'm pretty sure you've heard about that. That could be another great topic we could talk about.
I'm making a note for that.
Yeah, chip mortgages are for people, elderly people that do need, that's a perfect example, that have their house paid off and they want to just take some money out and live and enjoy themselves. Why have it in the house? So there's no payments that are required back on these reverse mortgages. So we would just give the client the money and then they would just plop that in their bank account and kind of live off of that if they wanted. So there is a product for that type of, for those type of clients.
Well, we may have to have another chat then. I think that would be a good one to talk about too.
Yeah, chip reverse mortgages. They're not for everybody. Yeah. And I do sell a lot sell chip mortgages frequently, but they're not for everybody.
Okay. So let's say somebody has decided that they want to buy a new pre-construction condo, and they want to pull some equity out of their house, which has a lot of equity in it. Should they go directly back to their bank? They still have a mortgage, but should they go directly back to their bank, or should they consider calling a mortgage broker to get all the options laid out in front of them?
You know what? When I started 12 years ago as a mortgage broker, Canada was far behind the US. In the US, everybody goes to a mortgage broker. Nobody goes to the bank. It's like 90% mortgage brokers. When I first started, it was probably 80% of the people went to banks in Canada, and like 20% went to mortgage brokers. Today, 12 years later, I think we're about 50-50. Wow. So as a mortgage broker, we still need to get those numbers higher though. A mortgage broker has 40 to 50 different lenders that we could go to. Yes. We work for the client. We don't work for a bank. We work for the client. That's why I made the move from a bank to a mortgage broker, because I've just got so many more options for my clients.
You know, and God bless the banks. And I have some pretty good friends that work for banks directly, but they don't have the options that you do.
Yeah, they don't have the options. We look for the best rate for the client. We don't have a bank over our shoulders saying, don't, watch what rate you offer, watch what rate, because they've got their margins they have to cover. But as a mortgage broker, we know what the bottom rate is out there, and we strive to get that for our clients always.
Absolutely.
So there's no cost for a client to call me and ask for my opinion. I'll be happy to speak with them, and hopefully, they'll be happy with my service, and we can go from there. But definitely, I would look at all your options and definitely reach out to a mortgage broker. We're here to help you, and we're looking out for their best interest.
Okay. Well, I'm definitely going to put your contact information underneath, so that when people either listen to the podcast, or I think we're going to put this on YouTube as well, so it'll be there. People need to email you, or I'll get your contact info.
That's awesome. Yeah. And they can find me all on social media platforms as well.
Oh, I know you're everywhere. You are everywhere. What sort of paperwork would you require when someone does call you? They say, look, we want to do this, we want to move forward. Is there like a shopping list or a list of things that they would need to provide?
Yeah, like it usually takes a couple days for people to gather all their paperwork. There is a little bit of paperwork involved, maybe a lot, but we do require this paperwork in order to get the ball rolling. So definitely we need your income confirmation. So current employment letters. We can't have an employment letter from back 2019. It's got to be current, no more than 30 days old. So employment letters, current pay stubs, T4s. We need a mortgage statement, property tax bill, for the year that you're applying for this mortgage. So 2021 property tax bill,
Makes sense.
ID, client
Yes.
consent form. We do get clients to sign a consent form.
Sure.
And your
Self-employed.
lawyers.
Any extra
if
stuff?
Yeah, if you're self-employed, of course, and all self-employed people know this, that it's a little bit more paperwork.
Boy,
We're all
I do.
pretty much educated on that.
Yeah.
So if you are self-employed, then I do need you to dig up your last 2 years filed. So your 2019 and 2020. I would need your full T1 general and then business registration.
Right.
Yeah.
Okay. Well, that's also
Yeah,
another
so-
topic we could talk about at another time. The mysteries and the wonders of getting financing when you're self-employed. Oh
Yeah,
my
they've
God.
made it a lot easier now because I'm telling you, 60% of the people out there are self-employed. Like it's really
60%?
growing.
Oh, see,
It's
I didn't know
about
that.
60, yeah.
I know I am. And you are.
Yeah, and there's a lot
Yeah.
of self-employed people out there or who own a side business. Okay. So they
Right.
may be working full-time but own a side business. But yeah, definitely they've tweaked and made it a little bit more friendly for us self-employed people.
That's good.
There's
to know.
ways to buy a house when you're self-employed.
That's good to know.
Yeah, for
So,
sure.
Denise, this has been great. It's a real
you.
eye opener, and I think it's providing a valuable service to the public because a lot of people, again, they may be sitting on a bunch of equity. They bought their house 15 years ago, and they'd like to do some stuff, but they don't realize that the light bulb hasn't gone off. That you know what, we got money sitting here untouched that we could be using right now for the greater good.
Randy, I can't begin to tell you. I'll just say this last point. In the last 2 years, a lot of younger families,
Yep.
like 40s, 45, 50s,
Okay.
they've actually been taking equity out to buy properties for their children because they're so
Absolutely.
afraid of what's going to be happening with these homes that they're just trying to, even a condo, $500,000 condo, $100,000 down payment.
Yep.
They're pulling that equity out, purchasing properties so that their kids will have a property when they get to be old enough to move out. Like it's been, the prices of homes are skyrocketing. So definitely
you know what?
equity.
I don't think the prices are going to slow down.
And equity sitting in your home is doing nothing. So
I think it's a good plan and a wise plan. So listen, thank you so much for being on board today. And let's do this again. I have a feeling you and I could talk about first of all, we could talk probably the rest of the afternoon. I'd be happy to do that. But let's save the next one for next time. And maybe we can do this again. If you can fit me in, that would be great.
yeah,
And,
for sure. Anytime, Randy.
Okay.
Thank you for having me.
Denise Pisani, the best mortgage broker out there, and she's going to win that. Is that the Mississauga News poll that you're?
Yes, it is. Reader's Choice Award.
Reader's Choice Award. I'm counting on it, and I'm pretty sure you got a very good shot at that for the entire
Thank you
city.
so much, Randy. I appreciate it. Appreciate your support always.
No problem. Thanks for being on board today, and we'll see you again soon. Take care.
Thank you. Thank you.
Bye.
Bye-bye.
Thank you for listening to another episode of the Randy Selzer Real Estate Podcast. Follow us on Podbean, Apple Podcasts, Spotify, and Stitcher. And check out our main website at randyselzer.com for much more valuable info on the Canadian real estate scene.